Hi, good afternoon. I am Mark Dooley, and this is Next Gen Money Talks. I'm excited for today because we are going to be going over our last session of the credit counseling, credit coaching, credit, everything to do with credit. We've been going over this. We talked about how to build a credit score. We've talked about is bankruptcy an option? When do we look at bankruptcy? We've talked about a lot of different things out there. Should we use credit cards to get rewards points? Should we use credit cards to build credit? What goes into a credit score? Guys, there's so much content. If you guys missed it, check back at some of the previous YouTube videos that are out there. There's a lot of content, a lot of value being added in there. But for today, we're going to talk about debt settlement companies. This is kind of the last, the piece de la resistance when it comes to talking about credit, because these are companies that kind of blend between everything we've talked about. We talked about banks, we talked about credit card companies, we've talked about a lot of different subjects, and the debt consolidation company falls into one of those categories where they're not exactly a bank, and they're not exactly an attorney, and they're not exactly a money coach. They kind of wear all hats, and at the end of the day, I'm just going to start by saying they're not well received in the financial community because they've been abused, misabused. That it's very easy to take advantage of somebody using a debt settlement company. So this all came out because I was asked a question this week, which is, should I hire a debt settlement company? And a client said, I got an offer. If you guys have debt, something you've probably you've gotten something in the mail that says, up to $25,000 we can write off, and we'll help you settle. We'll go to bat for you. We'll fight for you. These kind of words. They're not attorneys. This is not a lawyer that's doing this for you. All that's happening is you are sending a payment to the company, and instead of getting the payment made, they're holding your payment and then negotiating on your behalf with all of these other companies. It is something that is entirely within your ability to be able to do this. They're not providing a service that you can't do for yourself. It's just, do you want to do it for yourself? It's kind of like changing your own oil. Like, do I really want to change my own oil? Not really. I'd rather just pay somebody else to do it. For some people that are watching this video right now, like, I change my own oil. I do that. Mark, I'd be happy to pump my own gas. That's all I can do. I'm not a car guy. I'm just gonna let you guys know right now. It's not part of who I am or what I do. I know how to change a tire. That's got to be worth something. So, but either way, should I hire a debt settlement company? The first thing we have to do is understand what is a debt settlement company, what's the service they provide, and then how much does it cost. When you're going through and doing this, debt settlement is basically offering less than what you owe in order to get a reduced payoff. So, for example, if I owe a company $5,000, I say, I'll cut you a check for $4,000 right now. Go ahead and write it off. I don't want to pay you any more than that. They may accept that. Okay, it happens all the time. It's a very common occurrence that when you lend money, that there's a chance you might not get it all back. That's why they charge interest. That's why they do what they do. The banks and the credit card companies do. The debt settlement company comes in between and says, look, you're going to send us your payment, and in return, we're going to go negotiate with them on behalf of this. It will typically hurt your credit. It's very, very rare that it doesn't, because they're going to stop making your payment. They have to put you in a place where you're going to play ball with the people that you owe money to. Before we go any further in this, I want you to understand, as a consumer, if you are behind on payments, there are certain protections. There's certain things being put in place to protect you. And let's start with this here. This is the Federal Trade Commission. Let me pull the website up here so you guys can see it. And this is just talking about how to deal with debt. The Federal Trade Commission is a consumer agency. It's designed to protect individuals that are going through harsh financial situations. And, you have things that are out there. And again, they're going to put right here, use caution when shopping for debt relief services. Debt relief services is another term for a debt consolidation company, a debt settlement company. They go by different names. And we're going to talk about debt consolidation loan later, which is definitely a possibility. But we'd be careful, because a lot of these companies can use these terms interchangeably, and it's very easy for us to get caught up in it. And then they just walk through, develop a budget, contact your creditors, how to deal with them. and talks about federal law dictating when they can contact you, how they can contact you, what they can say and not say. And so if you're going to go down this path, arm yourself with the knowledge. Knowing is half the battle. For my 80s children out there that watched GI Joe, knowing, now and knowing is half the battle. Learn what they can do and can't do, because debt consolidation companies get paid to get money out of your pocket, whether it's $5, $50, or $500. They're going to try to get money out of your pocket. So know what you're in for. That they talk about secured debts. We talked about this last week. If it's backed by something, they can come seize the collateral. They can come take whatever it is. So if you stop making your mortgage payment, they come take the house. If you stop making your auto payment, they come take your car. If you stop making your credit card payment, they have to go through a process called garnishing, where they try to take. We talked about this in the bankruptcy week, where they come and take try to take a portion of your check through a court order. So again, there's a lot of content in here. I want to leave the site up there so you guys can see it. Different things out there, debt management plans out there. But what if you want to do it yourself? What if there's a way that, like, what, I want to manage it myself. I want to know what's on there. This is going to be a longer article, but this is literally the Fair Debt Collection Practices Act. Okay. These guys are regulated. They have to perform. Now, do they always follow it? No, because most of the people they talk to are in desperate places, and they're able to kind of work around the code a little bit. No one's holding accountable to it, because if you don't know the definition of harassment and abuse, if you don't know what the unfair practices are, if you don't know what these things are, and they're doing it to you, it's almost like if you guys remember, like the World Wrestling Federation or WWE, like professional wrestling, the fake wrestling, it always seemed to happen when they slid the chair in and they were going to hit the guy in the head with the chair. The ref always looked away right at that moment. The referee kind of had that. It's kind of the same concept, the Debt Practices Act. If the referee doesn't see it, it doesn't happen. And so we got to make sure we know that they need to be aware that you know what's going on, that you know how to protect yourself as you're going through and talking to these companies, which includes civil liabilities, multiple debts, validation of debts. We have so much protection, and I'm talking from personal experience here. I've had to walk through and use some of these things, as my wife and I, we had some money trouble. That's what started Next Gen Money Coaching, was walking through some of these things ourselves, having to negotiate with a debt collector, having to have that conversation. I'm not telling you these things as like a theoretical thing. I had to use these. I had to say, you're not calling me at the right number. I told you you're not allowed to call me at this number. I had people, I'd tell them, look, you're not allowed to call me at this time. They're supposed to call between 8 a.m. to 9 p.m. my time. And they try to say, well, no, it's between 8 and 9 our time. So no, it's not how it works. And so, you just have to remind them of the rules sometimes. And then when they realize that they know who they're dealing with, they tend to back off. They tend to, work together and do it. The one thing you don't want to do as you're doing this is you don't want to shut down communication with them, which is what, a lot of debt consolidation companies will tell you to do, or debt settlement companies. Hey, just stop talking to them altogether. Leave them in the dark. When you leave them in the dark, they're just going to proceed and work their way down their legal channels. And once it gets to the law, once it gets to the court, ultimately, they have a contract that says you owe the money, unless you're in a fraud situation. But that's a totally different situation. We're not talking about that today. But, if you owe the money, when it goes to court, they're going to get the garnishment. They're going to get the money. And it's not going to come on your terms anymore. There is no negotiation at that point. It's whatever the judge determines. What he thinks or she thinks you can afford to pay is what you pay on there. Obviously, also, not an attorney, not a lawyer. Talk to an attorney to go through some of those things, explaining what those things are. If you're in that situation where you're facing a garnishment, get in touch with an attorney. Those are the people that go fight for you in those situations. The final thing I really want to talk about when it comes to debt consolidation, then we're going to jump over to, debt settlement. Then we're going to jump to debt consolidation, is some of the costs and some of the fees included in it. And I'm going to show you one last site on here. And when is it time to work with them? Where's my chart at? The risks of debt settlement. Now, this is not me talking about it. I'm never going to tell you, as a financial coach, it is not my job to tell you, should you do this or should you not do this? Same thing that I said when we talked about bankruptcy. I'm going to give you the pros and the cons. I'm going to let you make an informed decision on what you're doing. I have my own opinions when it comes to debt settlement. I believe in the majority of the cases, it is not a good idea to do. It is very rare that a debt settlement case makes sense. But it's very easy for us in the financial community to start putting always and nevers You never want to use always and nevers because everyone's situation is unique. But let's look at the debt settlement risks. First and foremost, the fees can be very, very high. If you don't know what the fees are going into it, and there's not clear transparency. When I worked in banking, I saw this a couple times. Clients would be in a debt settlement program, and they were making a payment. And let's just use easy numbers. They're making a payment of $500, and they think their $500 is going to pay off their debt. And the debt settlement company was just collecting the $500, wasn't making any payment on anything. And then as time went on, they built up over $3,000. And then they got a lump sum. They wanted to go pay everything off, and they got a settlement and things happened. Good for them, but this is what happened. They got a settlement and they went to go pay off all their debt, and they found out that the $3,000 they'd been paying was just all the upfront fees paid to the company. The company never paid any of the money out, and this is also several years ago. Laws have changed, things have happened, but it's very hard to try to fight to get your money back in those situations. Make sure when you're making payments that you know where it's going to. How much of every payment is actually going to your creditors? How much is being held by the company? How long can they hold it for? Things like that. There's a lot of questions out there. The second thing is credit score reduction. Some of these companies, they'll use very deceptive, I don't use the word deceptive, but I'm going to use the word deceptive language out there in their marketing and advertising. And it says on there, it'll say, your credit score may be reduced. Well, no, it's not that it may be reduced. They're going to stop making your payments. The minute you stop making a payment, your credit score is going to go down. It almost always will happen. I think they even word it that way. A debt settlement will have a negative impact on your credit score, even if you work directly with your credit. A settlement may be reported to the credit bureaus. Their job is to get the lowest payment possible, the lowest terms possible, the lowest settlement possible. They don't care about your credit. And in fact, you have to sacrifice your credit in order to get those settlements. It's part of the deal. Now, when you go to negotiate later, you can ask for it to be removed. You can make it a condition of making a repayment to them. That's all out there. But when you use a settlement company, you lose that option. And the last one's the tax implication. I've seen this happen. That we had someone make a payment, and they went through, and all that money that was forgiven, it was a 5 figures. It was over $10,000 that was forgiven. They had to go back and pay taxes on it, because it wasn't negotiated as part of the settlement. When you're negotiating yourself, you can negotiate whether or not it is a tax, whether it's a taxable event or not. It's called a write-off. So, like, if you owe $10,000 and you owe me $10,000 and I take $8,000, I can write off that $2,000 as a loss, and you have to claim it as income. It's one of the big debates right now out there with loan forgiveness with student loans is what happens to the taxes when that loan's forgiven. Technically, the company should be able to write it off and receive a tax deduction for it, but that means that as a lender, as a borrower, that I would need to pay the taxes on it. So, you may get out of $1,000 or in this situation, the person had $10,000 that they got out of, but as a part of that, they had to pay, I think it was like $3,000 in taxes because of the offset of what they had. So be aware that they give you an example right there. If you owe a creditor of $10,000 and they agree to take $7,500, you're going to owe them $2,500. This is real. This happens to people every single day. So just be aware. Those are the 3 main things that debt settlement companies can do. But you may go, hey, Mark, I really want to look at something. I need something. My bills are too high. My debt's too high. It's going to take me forever to pay this off. I need some help. And that's where a debt consolidation loan, especially if your credit has not been affected yet by it, a debt consolidation loan really would be a strong candidate, strong possibility for you. Now, a debt settlement company is going to let your credit fall, and they are going to, the debt stays on the different creditors out there, and they just negotiate with those creditors on your behalf. A debt consolidation loan is where the company is going to go and actually pay off all those debts for you. All right, so imagine for a second, you have 3 credit cards. You have let's just say Citi, a Chase, and a Discover. You have 3 credit cards. And then this company comes in, the debt consolidation loan comes in and says, fine, we're going to go pay off all those bills. So you no longer owe Chase, you no longer owe Citi, and you no longer owe Discover. You don't owe them anything. You owe this company now instead. That's called a debt consolidation loan. They've consolidated your debts into one new loan, and you owe them the money now instead of all these different creditors. Very, very different than debt settlement. Debt settlement side, you're not getting the money back. You still owe each individual creditor. the debt consolidation, they're going to wrap it all into one loan. And to give you an idea what this looks like, let's pull this back up here. To see what this looks like, I'm just on bankrate.com. I love Bankrate for anything that's out there when it comes to lending rates. Their calculators are amazing. So in this situation, let's just say you owe $25,000 on credit card. We're not talking about mortgage. We're not talking about mortgage. We're not talking about car loan. We're only talking about unsecured debt. We talked about last week, unsecured debt. $25,000 is what you owe. You're going to pay it off over 7 years, and your interest rate's 18%. Your payment's $525 a month. In order to borrow that $25,000, you're going to pay $19,000 in interest on all those different credit cards that you owe, right? A debt consolidation company says, you know what, we're going to take this away. We're going to turn this into, let's just make this an 8% loan. Okay, we're going to take it down. Now, is it still high? Like, a mortgage rates are 3-4% right now in the country. 8% still really high, but it's way better than 18. Or if you're at 22 or 29%. Let's go and just recalculate this. Wow, you went from a $525 payment down to a $389 payment. You have completely changed your cash flow situation. You've put an extra over $100 back in your pocket. In addition to that, if we want to go the other way and say, Mark, I'm fine making that $525 payment. I'd rather be out faster. I'm just going to do some quick numbers here, kind of guess and check model. 5.5, 60. Very close to that. 57. Yeah, 57 months. So we were able to take off, over 2 years just by simply refinancing and putting it into a debt consolidation loan instead. And there's a lot of debt consolidation places out there. I just pulled this up on Bankrate so you guys can see it. Lightstream at 5.95, Upgrade, Best Egg, SoFi. I've personally used SoFi before. I've had clients use SoFi. Figure, Payoff, Marcus, which is a Goldman Sachs company. You guys can see the rates: 5.99, 6.99, and 19.99. They're not mortgage rates. They're not car loan rates. They're not that low, but they are way better than credit card rates. And for the most part, you can also get a much better term. So, like, let's say cash flow is a problem. Let's go back to the other calculator here. I've got my $25,000. Let's go back to my original numbers here. Calculate. I'm paying it off over the next 7 years. I'm paying $525. That's a painful payment. I need to get that payment down. Well, what if I were to refinance this into a 10-year loan? And let's say I only got the rate down to 13. My payment still went down because I'm stretching the time out a little more, but now I have a fixed payment that I can make as I go. If I can stack those two things together, a low interest rate plus that extra time, now I'm down to $300 a month. Now, $300 a month for 10 years is not a fun number to have. I get it. I'm not saying that we should want these things, but it's way more manageable than a $525 as you guys are going through and doing this. This is called debt consolidation. This is where the company that you're getting the loan from is going to pay it off for you as you're going through and doing it. This is a very different thing than a debt settlement company, where a debt settlement company is going to go in and leave the debt where it's at and just simply negotiate. So as you guys are going through and doing this and thinking about this, and this is just credit in general, I'm going to kind of recap everything we've talked about here. This is kind of the end of the credit session. We're going to start talking about other things going in the next coming weeks. We're going to jump back to budgeting, which, by the way, next week we're doing our next budget boot camp. If you have not gotten a chance to sign up for our budget boot camp, you want to go on there and do it. It's nextgenbudget.com. Let's get that up there so everyone can see what it is. Nextgenbudget.com. It is $49 to attend it, and you will not want to miss out on it. It is an amazing event. It allows you to get a budget that works for you, that puts money back in your pocket. Take time to go sign up for it. So it's a 5-day event that you're going through. It's emails every day. You're getting videos every day. We're working with you to help build a budget that puts money back in your pocket. So take time to do that. If you have questions, or you want to be interviewed, you want to come on the show and you want to share your story, send me an email. The scrolling thing should be down there right now where it says Money Talks at nextgenbudget.com. Love to connect with you. Love to bring you on. There are stories out there. People need to hear the stories. Money's such a subject we don't talk about. We don't make it very public, very common. We want to make sure that we get your story out there. So thank you so much. This is the end of our credit session. This is the end of talking about credit for a while. We'll come back, and obviously, it's impossible to talk about money without talking about credit. But we're going to move on for the next couple weeks. We're going to start talking about budgeting and what budgeting looks like. All right. We believe here at NextGen Money Coaching that most people, if not everybody, wants to do good with money. And doing good with money looks like jobs and better jobs, raises and bonuses, positions and promotions, provisions and resources, checks in the mail, finding money, and debts paid off so that you have more than enough to dent the universe in the way that you were called to. Thank you so much for joining me. You have yourself a great day.